Larsen and Toubro's earnings met street estimates. Profits were aided by higher other income, but the management commentary slightly weaker than what the street was working with, despite maintaining the guidance. Let's talk about that with the MD and CEO, Mr. S. N. Subrahmanyan, who joins us right now on the phone line. Mr. Subrahmanyan, thanks so much for taking the time out. We were just talking about this in the morning that unlike what's happening, or rather 2 years in a row now, at the end of Q2, you've not cut the guidance, which is a positive as far as the next few quarters go. But just give us a sense of how the quarter went by and how confident are you about business environment and order inflow for the next couple of quarters?
I think we're given our guidance. Let's stick to that. The way things are going, we seem reasonably positive and confident about the guidance that we're given. The quarter gone by has been decent for us. We have shown growth in all parameters, order inflow, sales, and profitability, and therefore we feel that that's the way to go forward. Right.
There are notes which suggest that there's a strong performance on the core E&C order inflow and margin, hydrocarbon doing what it is doing, and therefore there is a chance that margins may surprise on the upside in the quarters ahead, Mr. Subrahmanyan. Can you give some guidance about that?
I think we'll stick to our guidance, and that's what it will be. There will be margins in one of the business. There could be something else in some other business. Overall, we'll stick to, as a group, we will stick to the guidance that we're given from that point of view. Yeah.
Mr. Subrahmanyan, let's talk about overall business domestically and internationally. While your order book, bulk of it has come from international orders, is the domestic market looking a bit soft?
How do I say that?
What's the environment like? You can just go ahead with that. Is it looking soft to you? Are the coming few quarters likely to still face a drag with regards to domestic orders, and bulk of it will still be focused internationally?
Devina, it is like this. The domestic sector can be broken up into three broad baskets. Now, one is the government spending, second is the public sector spending, and third is the private sector spend. Now, what you have today is the government spend, which is essentially in projects like water, power transmission, a certain extent into large ticket infrastructure projects like metro and such. What you see here is that there's an intention to put projects in many of the cities and many of the places. But this has to be backed up by real money. The government resources are a bit stretched. Elections just got over. Many social schemes have been announced, so on and so forth. And what I mean is the general elections and some of the major state elections. The government has to get its acts in order to see how to continue.
Right.
Okay.
And so on and so forth. It takes time. From the public sector point of view, major public sector, especially in the steel and other sectors, have had their capex spend over the last few years. So much of the capacities have been built up, so I don't see too much going forward. The oil companies are expanding for various reasons, or strategic and otherwise, including Euro 6 norms and such. And therefore, we see some oil in the hydrocarbon sector, including on the exploration side from ONGC and such organizations. You will see spend on the power transmission and water as usual, but some of it is due to the affirmation UPD schemes, and some of it is due to the state governments wanting to take the last mile connectivity of water, so on and so forth. The major issue going forward would be to conceptualize big schemes, the river interlinking, the road sector, which has suddenly slowed down, the EPC side as we push forward. The dedicated freight corridor, Bombay to Delhi and Delhi to Howrah is done, but a few other railway corridors to be done in other places has to be moved forward. The railway electrification scheme, such projects have to be pushed. If that is pushed, then I think that will stand good for the future. Okay. From the private sector point of view, as you're very clearly aware, much of the private sector is having difficulty from their profitability point of view, and therefore the capex spend at the moment is limited. There are also some signs of distress in certain sectors like auto and steel and cement, and therefore that is going a bit slow. Now, the positive sentiments that are prevalent because of the many actions that the government has taken, and some phenomenal steps have been taken, including, in my view, the GST, the RERA Act, the Banking NCLT Act, the tax reduction from 33 to 25. All these are phenomenal steps that have been taken, extremely positive and extremely required from an economic revival point of view today. But will these acts immediately result in positivity? No. The positive sentiments come in. And I think as though will start getting generated in the private companies is because of many of these positive greenhorns being given by the government. I think that will result in good results over a period of time. You need to give it 6 months to 1 year or sometimes more to get these acts together because you have to make profits, pay less tax, create the capex, and then go on for further expansion. So let's be positive. I think things will happen.
Okay, so obviously while much of it that you said on the domestic front depends on the government spending, that because of the constraints that they're facing right now could actually be a little bit of a pushback. So can we safely assume that maybe for the next quarter or so, should not expect anything big bang on that front?
From our results point of view, we'll be as we have forecast. I don't think we are planning there's very big bang from that point of view. But in my view, slow and steady wins the race. So that's what we are on to.
Okay. In terms of various segments, I believe even hydrocarbons, a bulk of the orders came in from that segment. Is that going to remain a key driver for you?
I think they have done very well till this time. But these orders are, as you know, it is cyclical. We have got the orders that we need to get. There are 3-5 more months, nearly 5.5 more months this year. They have a budget to achieve. They will go for it, and I'm sure hydrocarbon will achieve what it needs to achieve.
Mr. Subrahmanyan, would you believe that working capital elevation would stay for the period of time? And as an industry captain, would you reckon that the industry at large would have this issue until the foreseeable future?
I'm only a wicket keeper, so I'm not the captain. The working capital has got 2-3 components. Let me try to explain to you, Neeraj. What we did from our working capital point of view was that, in April to June, we normally collect quite a bit of money during March-April period because many of the either the private sector or the government sector disburse their budgets during the time for various reasons. So we had a good collection. Now, when we collect money, we also have to pay our vendors, MSMEs, and various other subcontractors and others to help us from the business point of view. So we did that. So money went out of the company to close out many of the older accounts and pay off many of the vendors, subcontracts, and such. Second, most of the government contracts today come with the mobilization advance for some of the projects comes with interest-bearing advances. So we had taken some interest-bearing advances. Since we had money with us due to the good collection drive, we gave back some of the money because we didn't want to keep those interest-bearing advances with us. Now, having said that, these two, money went away from the company, the working capital went up. Now, at the same time, we do find that from a collection point of view, whether it's from government or public sector, it takes a little more time than normal nowadays. Whether it is collection of outstanding dues or whether it is collection of retention, it is taking slightly more longer time than is the norm. For various reasons. It may be purely procedural, it may be a slight shift of funds, it may be budgetary allocations, whatever. It's taking a little more time. And that is the result of the working capital, which has slightly gone up. We are fairly conscious about it. We are working on it, and we will track it to whatever it is to see how to get it done.
Okay. We wish you all the best for all of that and more, Mr. Subrahmanyan. Thank you so much for taking the time.
Happy Diwali to you.
Yes. Happy Diwali to you and entire team at Larsen & Toubro.
Thank you.